Hello again, this is the third part of our series dedicated to the Elliott Waves Theory, and in the first part we discussed the generalities or what makes an Elliott Wave cycle and this beautiful and wonderful theory, and then on the second part we tackled the rules of an impulsive wave, the most basic ones, and how an impulsive wave should look like, and how to trade binary options for the second wave retracement. That was what we've done so far. When it comes to corrective waves, because Elliot split a cycle into impulsive wave, into this part, and then a corrective wave. So you have an action and a reaction, or an action and a reaction, an action, a reaction, action, reaction, or action, reaction, action, something like this. But to keep it simple, Elliot defined this as an impulsive wave and this as a corrective wave. Believe it or not, markets, in this case this is the Forex market, because we use the Australian dollar US dollar currency pair to illustrate the Elliott Waves theory. So in the case of even on the FX market, prices spend most of the times in consolidation, not in impulsive waves. Most of them are corrective waves. As such, corrective waves, as defined by Elliot, are more important, or you will find them more often than impulsive waves. In a corrective wave, this is a corrective wave. This is a correction, let's say. The second wave here is the correction. It corrects the first wave in blue. This is also a correction, or a corrective wave. This is the fourth wave. Is always fourth wave in an impulsive wave is always a correction. The second wave in an impulsive wave is always a corrective wave. So in a cycle, you will end up having one, two of a lower degree and one of a bigger degree. I'm talking about corrections or corrective waves, of course. If impulsive waves are five-way structure, guess what are corrective waves? Corrective waves are three-way structures, and they are labeled with letters. Let's put here corrective wave. Corrective wave. Three-way structure labeled with letters. Therefore, whenever you look at an analysis from this moment on, and you see an Elliott Waves analysis, and you see some letters on the screen, that you know that those are corrective waves. This is A, B, and C. A, B, and C. A, B, C. Let's arrange them a bit. Therefore, in black, 1, 2, 3, 4, 5, corrected with A, B, C. That's an Elliott Wave cycle. It would be, or it can be, 1, 2, and then it starts in black again. 1, 2, 3, 4, 5, corrected with A, B, C, and so on and so forth. So a corrective wave is a three-way structure. But mind here that corrective waves are more complex and expand into so different areas that the Elliott Wave theory, at least as it was intended to be, becomes very complicated. Namely, Elliot further divided corrective waves in simple corrections and complex corrections. So let me just put here an S from simple corrections, and complex correction. And complex corrections. Now, when it comes to simple or complex corrections, you won't know from the start what the market will form. But what you would know is that all waves of different degrees are labeled with letters, even though some parts of the complex correction may have a five-way structure. Let me give you an example. an ABC like this, it is called a flat pattern. What does it mean, a flat pattern? A flat pattern means that wave A and wave B are correctives or three-way structure, and wave C is impulsive or a five-way structure. So the overall correction here, this ABC, will have will have the following A, B, C of a lower degree, corrected by A, B, C of a lower degree, and then the C wave to be a 1, 2, 3, 4, 5. This is being called a flat. But this is just an option that we have. There are so many options and opportunities. You will have a zigzag. In a zigzag you will have A, a five-way structure, B, a three-way structure, C, a five-way structure. The difference between a zigzag and the flat is that in a zigzag the B wave cannot retrace more than 61.8 when compared with this swing, and in a flat the B wave must retrace more than 61.8. So the key to looking to a corrective wave is to look at the first part of the corrective wave. If this first part of a corrective wave is a five-way structure, then the B wave cannot retrace more than 61.8 of it. So what do? We go and take a Fibonacci retracement. Then, if it is a five-way structure, the more the market moves towards the 61.8, the more call options we will buy if the previous impulsive wave was bullish, and the other way around. On the other hand, if this is a three-way structure, and we know that a B wave follows, we will buy put options here until market moves beyond 61.8. These are the very basics of Elliott Waves theory, and the following two recordings we will use to illustrate some examples on different markets, one of them being here, and then we'll randomly pick a chart, a currency pair in the chart and the time frame, and then we'll simply see what the interpretation will be on the current price action, because without examples everything seems confusing. Now you know that Elliott Waves is not that easy. Stay tuned, please.